Assalamu alaikum. This is my YouTube channel Learn with Sir Nabeel. I hope you all are well. Today we discuss about finance. So, the topic is all about mutual funds, a better way of investment. So, we all know mutual fund is a common pool of money in which investor place their contribution that are to be invested in different types of securities. For example, equity fund, bond fund and balance fund. In equity fund, we buy equity asset, and in bond fund we buy debt instrument such as bonds or government securities and money market security. When we talk about the balance fund, it will have a mix of equity fund asset and debt instruments. Now, why we choose mutual funds? So, firstly, we have to diversify our asset. Highly liquidity, tax benefit, well regulated, easy installment, and high return on investment. So, we have some myths about mutual fund. Firstly, mutual funds invested only in shares. Mutual funds are prone to very high risks and actively traded. Mutual funds are very new in financial market, which is wrong. Mutual funds are not relatable and people really invest in them. The good thing about mutual fund is that you don't have to pay attention to them. But this is a cycle of mutual fund. Firstly, the investor invests their money to the fund manager. Then fund manager choose security to invest in securities. Then he generate the return and he pass the return or profit to the investor. And this cycle goes on till the further investor invested the money. Now we have types of mutual fund. By structure, we have three types: one end fund, closed end fund, interval funds. By investment objective, we have six types: growth fund, income fund, balance fund, money market fund, load fund, and no load fund. So, there are some advantages of mutual fund. First is portfolio diversification. It's enable him to hold a diversified investment portfolio even with a small amount of investment like 2000 rupees. Professional management. The investment management skills along with the needed research into available investment option ensure a better return as compared what an investor can manage on his own. Reduction diversification of risks. The potential losses are also shared with other investors. Reduction of transaction cost. The investor has the benefit of economics of scale. The funds pay lesser cost because of the larger volume and it is passed on the various investor. Wide choice to suit risk return profile. Investor can choose the fund based on their own risk tolerance and expected return. High risk, high reward. Now, we have to discuss the disadvantage of mutual fund. Everything has advantage as well as some disadvantage. The mutual funds disadvantage are as under. There are four. Number one is no control over cost. The investor pay investment management fee as long as he remains with the fund. No tailor made portfolio. The very high net worth individual or large corporate investor may find this to be constrained as they will not able to build their own portfolio of shares, bonds and other securities. Managing a portfolio of fund, availability of the large number of fund that can actually mean too much choice for the investor, so he may need advice to how to select the fund to achieve his objective. Delay in redemption. It takes at least 3 to 6 days for redemption of the units and the money to flow back into the investor's account. So, this is my quote about mutual fund. Mutual fund aim to strike a balance between risk and return and give the best of both to the investor. Thanks for watching my channel. Please like and subscribe my channel. Allah Hafiz.